Hello, welcome to my sixth time that I want to teach as many U.S. business owners, U.S. entrepreneurs, franchise owners, and also 1099 income earners how you can save taxes legally with the Spendthrift Trust. Today's example is a restaurant in New York. He contacted me back in 2025 because he wanted to see how much money he could save. I've updated the information with 2026 taxes. Now, most people have never heard of the Spendthrift Trust. It's legal. It's in the IRS Tax Code 643B. Comes from England way back when King Henry VIII, that famous king who chopped off his wives' heads, started the Church of England so he could divorce them. Well, he went to go tax the lords and ladies of England. They went back to the 12th century, the Magna Carta. Said, oh, no, King Henry VIII, you can't do this. It's contract law that came to the colonies while we were still part of England. The law firm I work on behalf of has inherited a trust that will turn 365 years old in 2026, before we were a country. This coming 4th of July, the United States is turning 250 years old. Yay! Big celebration. Our current tax structure went into effect February of 1913. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys made sure they could save taxes. Well, if they can save taxes, we can save taxes. Hi, my name is Sally Gimmon, and I'm the owner of www.thetrustisyou.com. The law firm I work on behalf of was started 78 years ago, and not a single trust has ever been audited. Now, he was able to do 5 different taxes. The Business Spendthrift Trust is going to save you 90% on federal income taxes, and you'll stop paying taxes on state income taxes. Year after year, generation after generation. The Spendthrift Trust is going to save you in 4 very important ways. Number 1, save taxes. Everyone wants to know the secret of the rich to save taxes. Number 2, it's going to keep your information completely private. Unfortunately, when I started both my business and beneficial trust, I had 6 LLCs. No one told me 40% of LLCs, S Corps, and C Corps get sued every year. I Googled it. You can too. That's worse odds than with gambling in Las Vegas. The trust is on the federal level. LLCs, S Corps, and C Corps are on the state level. What they do in New York is different than what I do here in North Carolina or when I started the trust when I lived in Arizona. Number 3, talking about lawsuits. All your assets are in the trust. It's a titanium vault, and all lawsuits become frivolous and go away. And then number 4, you're going to leave a legacy for future generations. It's an amazing document. Again, the law firm I work on behalf of was started by a Harvard law professor, and now his grandchild and great-grandson run the things. So I want to make sure you know exactly what you're doing on that. So when you look at this, the New York restaurant made $122,000 in 1099 income. That's 24% tax bracket. Total federal income taxes would be $21,878, saving 90%. They got to save $19,960. He was listed as a corporation in New York, and his CPA had him set up the most expensive way. Corporation, and he was taking W-2 income. Worst way you could do this. So he's going to close down his corporation, and he got, for 2026, he will save at 7.5% New York corporation tax, an additional $8,845. So for all of 2026, he's going to save $28,535. With this money, he can put this back into his restaurant. He could pay off his mortgage. He could buy a new vehicle. He could take his family on, he could take his family to someplace. You can give to your favorite place and everything else. With the Spendthrift Trust, it's legal. It's in the IRS Tax Code. When you start the trust, we'll set it up for you, a new EIN, employee identification number, and we're going to give you a letter to the bank where all your receivables go into that bank account and then all your payables come out of that bank account. When you file your taxes, you will file a 1041 tax return. We introduce you to the CPA that we have vetted for you. You're 100% your decision. Use the CPA we introduce you to, or use your own CPA. But your CPA has never told you about this. Now, I know the major question in the room is why does my CPA or my financial advisor not know about this? There are over 1 million active attorneys in the United States. There are only 4% who are trust attorneys. In law school, they get to study a textbook called so they can learn how to do this. If you would like to learn how to do this, you can go to www.thetrustisusyou.com. And if you want to set up a 30-minute tax breakthrough with me, it would be www.thetrustisusyou.com. Now, my whole goal is to teach as many U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, and 1099 income earners how much they could be saving in taxes. Give you a ballpark figure, 43 states have state income taxes. If you make at least $100,000 in 1099 income, just saving federal income taxes, and I don't care, there's 4 ways to file your taxes. Single's the most expensive way. Head of household, you're divorced with children 18 or younger living with you. You're married filing separately, and then the cheapest way is married filing jointly. Listen up, ladies and gentlemen. Quietly, on January 1st of 2025, the IRS changed married filing separately to match single. If you're married, you will save double in taxes to file married filing jointly. So even though whichever way you file your taxes and you make $100,000 in 1099 income, you will save 5 figures in taxes. So please, if you'd like to learn more, you can always contact me. I hope you learned something new today. Take care.